Welcome, Pure Investors. I'm Nick, and this is your August performance update for the Pure Income and Growth Fund. The fund declined 1.7% in August, reflecting the movement of two equity positions in the portfolio, plus a modest provision to the carrying value of private investment Illume. We discuss each in further detail in the body of this update. However, prior to this, a short reflection on markets in August. To Pure, it was an intriguing month as hawkish central banks sent bond yields higher. Be it complacency or optimism on a prospective future central bank pivot, equity markets actually trended higher through August until the Federal Reserve kicked the proverbial stool out from underneath them. Truncating the Fed's commentary, the crux of its update was, quote, "The Federal Open Market Committee's overarching focus right now is to bring inflation back down to our 2% goal. We will keep at it until we are confident the job is done." End quote. The "it," of course, being future rate rises. The implication of this is volatility is here to stay in equity markets, which is a continuation of the optimal execution backdrop for the fund. Concurrently, our deal pipe remains very full, and we expect to execute over $25 million of transactions in the next 2 to 3 weeks. Turning now to August performance. The key detractors from August performance were equity, specifically in newly listed pre-IPO position Fiscal Note and Law Finance. Fiscal Note listed at $10 per share in August, and we were pleasantly surprised to see the stock close at $10.78 on the 26th of August. However, following the Fed's comments, and with no specific company news, the share price fell 27% in the next 3 sessions to close down for the month. Whilst disappointing for this month's performance, the fund has made a 27% profit on its investment from the pre-IPO valuation to the prevailing share price, and we will realise and distribute these gains for investors in the coming months. The second key detractor from performance was Law Finance, which on no specific news sold off 37% in the last 2 weeks of August. The company reported a solid full-year update, with strong momentum in originations and an origination pipeline the strongest since recapitalisation and restructure in early 2021. Its return on capital employed is now almost back to pre-COVID levels, and the Trident joint venture, which we can only describe as company making for Law, is expected to commercialise in the fourth quarter of this calendar year. Excluding the broader market sell-off, we can surmise Law's price movement could be in relation to a come-raise assumption based on its current cash balance. Law's share price, however, has stabilised and begun to recover over the last 2 weeks. Turning finally now to Illume. Illume is a private investment for the fund, being a company that specialises in what is termed near-patient diagnostics for common infectious diseases. Near-patient simply means taking diagnostic testing and results out of the pathology lab and putting them into the hands of either the GP or the patient. These point-of-care diagnostic products leverage specific intellectual property that Illume has built up over a decade. In fact, we first met Managing Director Sean Parsons in his role as founder of Illume over 8 years ago, before finally investing in Illume in late 2021. Illume's first mass-market product was to be an at-home flu test. The company had a licensing and royalty agreement agreed with global pharmaceutical giant GlaxoSmithKline, also known as GSK, to pre-package its at-home flu test with circa 40 million over-the-counter flu vaccines that GSK sells per year in the US every year. However, when COVID hit, it became quickly apparent to the Illume team that, with mere months of work, the test could be pivoted to detect the new pathogen. The team's pivot was a success, the agreement with GSK was aborted due to the pandemic, and Illume, a small Brisbane-based company, became the first test of all the test manufacturers in the world to be authorised by the FDA in the US for self-testing of COVID. This was quickly followed by US $260 million of funding support from the US government to Illume to build up manufacturing capacity in the US and to purchase millions of tests from Illume. At the height of COVID in late 2021, Illume was not only manufacturing hundreds of thousands of tests a month for the US Department of Defense, it was also one of the top suppliers of at-home COVID tests across the major pharmacy chains in the US, generating tens of millions of dollars of profit a month. However, as with many great success stories, significant challenges accompany this growth. And ultimately, this month led to Illume placing its Australian operations, but importantly not its US operations, into voluntary administration. We break down the challenges that Illume has faced into two buckets. First, self-inflicted, of which there has been one specific challenge, and secondly, several improbable and exogenous challenges. The self-inflicted challenge was a necessary product recall at the height of the Omicron surge in late 2021, when the biological component of the test, a third-party component, was determined to be throwing off the accuracy of the test results. This resulted in the recall of over 500,000 tests and a significant amount of inventory write-down. Whilst expensive, the main hit was the hiatus in sales that this caused right at the peak of test sales. Conservatively, the company probably missed out on around US $100 million in cash profits. The improbable and exogenous challenges faced by the company were predominantly two things. The first arose from the Biden government in early 2022 giving away 1 billion free tests, but refusing to purchase any of these tests from Illume, despite having provided Illume with US $260 million in funding. The refusal to purchase from Illume was born simply out of the fact that Illume was still manufacturing in Australia at the time, whilst its US facilities were being stood up. This delivered windfall profits to Illume's competitors, whilst also killing the retail market. The second exogenous challenge has arisen from the US government stalling on its future pandemic preparedness plans. Illume's manufacturing was to form a central component of future pandemic preparedness through having warm manufacturing facilities to hand. However, the US $10 billion funding package to support this initiative remains tied up in Congress, with the Democrats now seemingly unwilling to risk the political capital required to get this package through, at least in the short term. So where to from here? Well, fortunately, since placing its Australian operations into administration, the US government has come through with a US $46.5 million funding package for Illume to purchase an additional 3.1 million tests. This cash provides a reasonable operating runway for the company, and it will now use this runway to move into a sale process which, if realised, will return a dividend to the Australian administrator for the extinguishment of the convertible note debt in which Pure sits. We have reasons to be optimistic on full capital recovery. Firstly, the net asset value of the US business on a going concern basis is around US $150 million versus the convertible note debt of US $68 million. And importantly, this ascribes no value to Illume's IP. Secondly, a US investment bank seeking engagement to run the sale of Illume's US operations has indicated a valuation range of US $300 million to US $900 million. Despite our expectation of full capital recovery on Illume, reflecting the conservatism with which we always approach valuations, we have modestly impaired the carrying value of Illume this month. We expect an outcome on the trade sale by the end of the year, and in the interim will remain in constant dialogue with both the company and you, our investors. Thank you for your time and support, and we look forward to updating you again next month.